Thursday, April 17th, market analysis. Stan Ehrlich, good morning, 9:48 California time, and we have a market that is like yesterday's early market, fairly quiet, but it didn't stay that way. I expected rallies, but didn't get it, and we had a pretty big, sharp down day. Yesterday's close was the lowest close in the previous 3 or 4 days, depending upon the index. And um, otherwise, this really didn't do a lot of damage. It certainly didn't do a lot of help to my bullish expectations. And the little rally we have at the moment today, which is up only about 2.5 to 3 points, isn't doing a lot of help either. We're doji inside trading range today, no higher, no lower than yesterday's high low. And that doesn't really mean too much. It basically means uncertainty, which these days, boy, we have a lot of. So, going to the 1 minute chart on the E-mini, you can see it opened and came up just a tiny bit yesterday afternoon, rallied some, dropped back to a little lower, and came back to a little higher at the moment. And that's the theme for most of the indexes, except for the YM and the Russell. They're a little bit different. So let's look at the S&P, SPY, and as you would expect, it's about the same, but because the overnight wasn't, applying to the SPY, we're close to the high of the day at the moment, but it's only in the middle of yesterday's range and up about 4 points at the moment. Not that big a deal. I got no signals, I got no breakouts, I got nothing. We have been fiddling around now for about the sixth day in approximately the same price range. You can tell by the bodies of the candlesticks, except for the last couple of days, we're a little bit higher. But the key day here is April 9th. That was a bullish engulfing for most of the indexes, and I will go back to the E-mini. We have a buy signal on April 9th, a big green bullish whopper of a huge range day, one of the biggest I've seen in many months. Keep in mind, I've been watching markets from 1971 late, drawing my charts by hand for the first 10 years. And then the Apple computer came around and CopyTrack, and then a lot of other programs as well. Ninja's very good. One of my favorites. Now, back to the S&P. 1 minute chart. And we're going to look at the QQQs. It also had a bullish engulfing at the very bottom of the market. Now, that was Monday of last week instead of Wednesday. Nevertheless, bullish engulfing, and it worked great. We've had a little setback, back into support, and slightly higher for the day. I still think there's going to be a rally, and I still think it could come up to about 475-ish on the QQQ. And I'll go back to the Spider. My upside objective is approximately 550. And for the E-mini, the upside objective is equivalent to the top of the reversal day. And I'm not really ruling out something along the lines of 5,800. But there's a couple of significant resistance area above the market where I expect it to stop, and I'm not looking for new historical highs at this point. I am looking for a move down to the lows that we saw a week ago, and probably a bit lower than that in the next few weeks, couple of months. So I can't yet turn longer term bullish, although I don't think this is anything beginning a bear market, and I don't think this is going to be anything other than a large technical correction. Okay, let's go forward again. Spider and Qs, and the 1 minute on the Qs. Okay, now we've got the NASDAQ, which had a bullish engulfing on Wednesday of last week. Great. It really hasn't had the follow through I would normally expect from these big bullish engulfings. On the other hand, it had a downside correction like the other bullish signals, which was in the ballpark and maybe a little lower than around the middle of the range of the bullish engulfing green day. That is pretty normal. As a matter of fact, my ER3 trading system tries to take advantage of that, in which case this one was just about right. Great. But I'm not getting the follow through to the upside that I'm still looking for. So starting to close below, I would have to say 18,050, 60, something like that. The lows of the last few days would put my story into serious jeopardy. I don't want that. I'd much rather it's, start to get a little stronger here and pop up. For the NASDAQ, I'm looking for a move up to approximately 19,666 or something, 19,650, and maybe up to about 2,500. I can't completely rule out something way up here to 20,900. Maybe. That's a little bit of a stretch. Next, here we got the 1 minute chart on the NASDAQ, and it's coming up a little bit at the moment. Just fine. Okay, we got a bullish engulfing last week on Wednesday with the YM, but it has broken a little bit below the lowest low since that bullish engulfing, but it didn't stay there. Now it is down some on the day right now, and so you do have a lower low than yesterday's low, and it is sinking a little bit more aggressively than the other indexes, which are actually higher on the day at the moment anyway. So we're getting some weakness in the YM, and that could be a little bit of a precursor to the other indexes. I don't know. This is getting a little bit non-predictable for me for the moment, but by the end of the day or in a day or so, yeah, I'll be right back on track with significant conviction and reasons to expect up or down movements. Okay, 1 minute chart on the YM. Overnight, broke down about 3 o'clock in the morning, made new lows, and has been holding a little bit lower than yesterday's lows since. And at the moment is actually making minor new highs for a few hours. And what about the Russell Index? It had a buy signal on Wednesday, April 9th, excuse me, which is the lowest low, like the QQQ, for the whole bear move. And so far, no upside follow through. We have not even gotten a tick higher than the high of that bullish engulfing big buy signal day. Now, just because the buy signal has a very large range does not necessarily mean that the signal is going to be a whopper of a signal. Or the results, I'm sorry, of the signal is going to produce a really big rally. It only means it's a buy signal. Don't read into it too much. So far, it's got nothing. It's going sideways. Here's the 1 minute chart on the Russell. At the moment, we have a little bit of strength. Okay, now bonds. Bonds had a fabulous sell signal, which I didn't really think was going to work, but it started to kill a bottom formation I was detailing a few weeks ago, which was working great until that bearish engulfing on April 7th. So we came down dramatically, tested a bullish support line or pretty close to it, and it bounced back up again until today. We started to slip back down some. There's no bullish signals, bearish signals here. It only bumped against some resistance and started to pull back down. So I think we're going to challenge these lows somewhere between 11 and 12. 111.20ish looks obviously likely. That's the best I can say at the moment. There is the distinct possibility of a very broad 1.5 year double bottom. But let's see that really start to pan out. It's not doing it at the moment. 10-year notes, pretty much the same story. It rallied up to resistance levels at the top of a little zone instead of the bottom. Pulling back down today, doji could easily come back down to support at 108. Yep, 108 to 108.12ish. This does have the distinct possibility of a very broad 1.5-year double bottom formation. It would have to break all the way back down to below 107 in order to kill that large possible double bottom. Remember, we need a breakout way up here at 116-ish in order to start the bull move from the double bottom formation. And if that happens in the weeks and months to come, we would have an upside objective of 124. Next, crude oil. At the bottom, bullish engulfing, ER green buy signal. Of yesterday, another one. And look at the strong rally we're having today. That's great. I'd love to tell you that every time we see this combination, this is what we're going to get. I can tell you that it is expected, common, but if you don't get it and you are lacking stop loss orders, protective stops, I like to call them, you could be in big trouble. So always, 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 always use protective stops, commonly called stop loss orders. A stop order can be used to get into a trade, can be used to get out of a trade, can be used to take a loss, can be used to take a profit. Next, and never use stop limits. You may never get a fill. It's always stop market orders. And what about heating oil? Well, we've got the same thing happening here. It's great. Buy signal at the bottom of the move. Auxiliary one yesterday. Good strong update today. I'm making minor new highs for the last week and a half or so. Upside objective would easily be reached at this point to the resistance area. I certainly cannot rule out 2.3 on the upside and maybe even higher than that. This market bottomed out at a really good, significant longer-term support area going back 7 months or something. So I like the looks of this very much. And I'm going to go back to crude for a second. You had an extremely long-term support area being tested for crude oil on that sharp break a week ago. Lows that were made way back in March of 23 and also, generally speaking, May of 23. So now it got up to resistance and is starting to get through it. Crude looks pretty good. Probably going to rally up, close a small gap that we saw here a couple of weeks ago on the way down. I like what I see. And we've got natural gas. Now, this is a different story completely. Natural gas had formed a head and shoulder top, did break out on March 21 with a slow decline, which is unusual. Usually they're very fast, sharp breaks for a day or two or three after an upside or downside breakout on a head and shoulder, or most technical patterns. Came back to the neckline, stopped, perfect, had a little bit of an extra test on the rally high April 3rd, came down, had a bullish engulfing, did not work. So if you followed that trade, you would have gotten stopped out with a loss and not in the trade anymore. Now, the dominant feature here is obviously the head and shoulder. Its minimum downside objective is 2.9. I'd love to see a bullish engulfing after we get down to 2.97. That would be perfect. We are very close to oversold. 1 or 2 big down days would do the job here. Let's see what happens. But I have to point out that I told you it was going to go down, or I thought it was going to go, predicted it was going to go down to 2.9 way back on March 21st. If you know what to look for, it's an easy thing to make the predictions. If they're coming true, just do the standard. Follow the pattern, do what you're supposed to do. Don't change the name of the game. But if they're not doing what you expected the pattern should do, that's when you've got to make a decision as to when you decide you're going to be wrong and either get out with a little loss or a little profit, one or the other probably. Next, gold. Overbought second day in a row, new highs. Could have a bearish engulfing red if it got below yesterday's lows, but it doesn't look particularly likely. I'm getting ready to tell you it's topping out, but I have no signal. All I've got is overbought conditions, which makes me very leery about any continued further strength. Silver rallied up to resistance. didn't quite get overbought. Frankly, not even all that close. And probably is going to follow through to the upside a little bit more and maybe will get overbought. We did have a bullish engulfing. It's working absolutely perfectly. The next day you were up, next day you were up, then up a little, then up more. And today's the first day on a little downside at the moment. That doesn't mean it's going to close lower, but it looks likely. But after a series of up days after the bullish engulfing. So that signal's working past tense very, very nicely and still could continue to do better. First upside objective now that other objectives have been met is 33.5. And maybe a test of the total top, which so far is a broad double top, but the downside breakout didn't hold. So I can only call it a historical resistance area at this point, not really a double top. Next, platinum. Double buy signal within 3 days. Working great. What could I say? First buy signal, up day. Second buy signal the next day, still closed higher with another bullish engulfing ER buy signal. Up the next day, up the next day, up the next day. And today, at the moment, we're approximately unchanged. Looks like we might be, yeah, but that's about unchanged. Okay, next, copper. Buy signal at almost the low of the whole move down. Next day, doing fine, strong, a little downside correction, new high close. Today, a new high and a new high close seem very likely. We've already got the new high. So that signal worked very, very good. I'm looking for a rally up to 4.8, maybe 4.9, and I can't rule out higher. But just because it keeps on going up doesn't mean I'm going to change my objectives. That would be silly. You talk about an objective in a very beginning, then you get yourself a big move. At this point, most of the move is probably over for the moment. Next, it's the grain markets, beans, oil, meal, corn, and wheat. Now, meal and wheat are giving me a little trouble, but so far beans, oil, and corn are doing good. When I say doing good, I'm talking about the potential of a very large, big, many month, if not year, bottom formation developing in grains in a general sense. So these major lows on soybeans, December of last year and April of this year, are very close to the same price and trying to produce a double bottom, which would have a major upside breakout if we got above 11. And that's exactly what I'm predicting. I hope I'm right. I'm not right all the time. So today, like the last 3 days, it's resting a little bit after getting up close to overbought, and that's okay. Just don't want any major reversals, don't want any major breakdowns, and I want, as soon as it can, to see higher highs and higher closes. Next, we've got soybean oil, which is making a new high for the last 2 weeks or so, and chewing into a resistance area and not quite overbought yet. So there's plenty of elbow room relative to RSI levels. And if you can get above 48.55 on a closing basis, which looks quite possible anytime now, then you're going to have a decent upside breakout for a new high for like 4, 5, 6 months and a shot at getting above the neckline of a double shoulder, head and shoulder bottom that started forming in March of 24, over a year ago. This pattern says we might get up to 61.75. That's going to take more than a day. So I'm very optimistic so far on soybean oil and soybeans for that matter. It's just meal's not cooperating very well. Let's go to corn. Corn market is rallying a little bit today at one point, and now it's down some. So other than that, it bottomed out. Oh, I'm sorry. This is not corn. This is soybean meal. Sorry. Soybean meal got up to resistance, recently made new lows to the trend, got oversold, bounced a little resistance. It doesn't have the same trend. It doesn't have the same chart formations. It doesn't have much bullish at all. This has really got to start to rally a lot, overcome previous highs, close above resistance areas, and finally break a long-term bear trend line to initiate a much bigger, longer-term upside objective, which just isn't there at the moment. Now, corn. It has rallied nicely, and we got overbought. So we're pulling back for a day or two. Nothing unusual. Might even dip a little bit more down to 477, maybe even 473 and a half-ish. But the story here is first shoulder low with a green bullish ER buy signal on February 26th. Perfect. Head and shoulder bottom of 3 months in size was by itself the head of a larger pattern. It worked, past tense, all said and done, gone. But it's important now because it's the head of the head and shoulder bottom, which has just finished its last shoulder. I hope. It looks like it. So far, so good. Back on a low on March 4th and a bullish engulfing ER buy signal on March 28th, the beginning of this rally, which has been pretty good so far. You know that we've come up from, 444-ish up to 488-ish. It only took about 2 weeks. Looking for more strength. Looking for resistance areas to be challenged, broken, and the neckline on this big pattern is at 516-ish with an upside objective of a whopping 632 and a half or higher. Next, wheat. Well, oversold conditions caused it to bounce, but kind of like meal, it only got up to some resistance. We've seen new lows for a long, multiple years since the war began, which was the historic high. And it just can't seem to break the bear trend. No trend lines have been broken. And every time it rallies significantly, it hits resistance levels and turns down to new lows. So far, that longer term pattern is still persisting. I don't know. Wheat really doesn't seem to have anywhere near as much bullish potentials as the other grains at this moment. Cattle. We got a buy signal on the bottom, of course. And we have new highs for the move. And we just closed this morning the gap I was talking about for the last couple of weeks. Done. Finished. Got it. Yay. So now what? Well, we're not overbought. We could easily come up some more. Challenge the highest high for the whole move. We got a buy signal on top. Before that, we got a sell signal, a buy signal on the, a sell signal on top. We got a buy signal on the bottom, 3/4/26, about 5, March 4th of this year. Then a sell signal on the high, and come on, all the way down, got a buy signal on the bottom of the break. 3 in a row that were really good. So maybe we'll see more strength. But the gap is closed, and I predicted this. So fine. Yeah, I think we're going to see a little bit more strength. Next, hogs. I don't know what's happening here. I got to figure this out. I think the chart's all goofed up, so I'm not going to make any comments about hogs. Two stocks, and this one is the Shell, SHEL. Buy signal exactly on the bottom, 4925. And you know, people, these signals are not drawn on the screen after the fact. They're drawn automatically the split second that the signal develops during the trading day, can be used for automated trading systems. And that's the reason I developed the damn system, ER signals. ER signals, ER1 scalp. Someday soon, I'll show you the track record, which was absolutely phenomenal. But the basics, I want to wait until I've got other information for you. Now, Apple. Oversold condition in a support area, rallying, no signal given. gapped up on a rally high, tried to close an old gap, getting a little confusing. At the moment, at a little bit of resistance area, which is not really showing any effect, does not stop in rallies. It's not really stopping the breaks either very well. So I may remove this later, but I'll leave it in there for the moment. Doji working its way a little higher. And we'll go back to the E-mini real quick and see if it has had any, whoops, don't want to do that, sorry, and see if it's had any more strength. Nope, a little bit ago, it stopped rallying. Wait. There we go. A little bit ago, it stopped rallying at around 10 o'clock and turned back down slightly. You guys have a great day and profitable trading to you.